1 is our live camera that we're looking at from Beirut, where the smoke is rising from the continued strikes. And then ELC3 is the view of the stock market there. And it all affects the potential labor market. Jobs numbers came out today, certainly a little too early to see how things are playing out in the broader economy, but the snapshot of the markets, certainly something to watch. We want to bring in Ben Zweig. He is a labor economist, the CEO of Revelio Labs. Good morning to you, Ben. How are you this morning?
Good morning. How you doing? Happy to be here.
Now, you see the stock market today. Obviously, we had a big sell-off yesterday as well. I mean, what are your thoughts as you're sort of looking at the markets here?
Yeah, I mean, it's down almost 1.5%, which is massive for one day. I think it is primarily driven by the jobs report. I mean, it was very negative, huge
Hmm.
miss on the jobs numbers by almost 150,000 jobs. So the consensus estimate was that we'd be up 55,000 jobs. Revelio, my own firm, predicted we'd be down 16,000, and we were down 90,000, 92,000, which is massive. And I think you mentioned that this kind of ties into the Middle East crisis, and I think it does, because sometimes when you see labor market weakness, you don't see a big reaction by the stock market, mostly because the expectation is that the Fed may come to the rescue. This may encourage the monetary policymakers to lower rates, but with all this concern about oil price inflation, that's a lot less likely. So this looks like just some weakness that we're going to have to tolerate.
It's interesting what you said there because maybe yesterday before these jobs numbers came out, we also saw some volatility on Wall Street, and we saw it again today. A lot of people have said, "Oh, the oil prices are gone up." I mean, just practically for myself, as I'm driving around, I noticed the gas prices have certainly gone up here in the New York, New Jersey area, and it's all tied in together. I mean, when you talk about the different elements of the economy, right?
Yeah, yeah, exactly. I mean, this all comes down to monetary policy. That's what moves asset prices the most, and it's not looking good on either front.
And Ben, you mentioned it, 92,000 jobs in February, the Labor Department reported on Friday. The unemployment number rose to about 4.4%. The job losses cut across nearly all major sectors, including healthcare. And certainly there was the nurses' strike that they had out in California. That was the issue. What are the sort of details in this jobs report that you're seeing that are problematic?
Yeah, yeah, the healthcare sector has been the most interesting one because that's where we got most of our gains in the last year. But healthcare is such a weirdly idiosyncratic industry in that it's not primary, it's mostly a function of government infrastructure spending, and that can't continue forever. So the more like real economy, if you want to think about it that way, have been weak for the year, and still weak. So those haven't changed that much. But now we are seeing a kind of reversal, so a revision toward the mean in healthcare, which has been propping up the entire economy the last year. So it's not looking good. I mean, we've got weaknesses in sectors that were previously strong, and the other sectors are persistently weak.
So this report has sort of dimmed the picture of the labor market. I mean, why were we? I don't know. Why did they not see this coming, so to speak? It seems like this has caught a lot of people off guard.
Yeah, I mean, I think the BLS has taken a reputational hit in the last 4, 5, 6 months, and alternative sources of labor market information have been coming out. My own firm included. We started putting out our own public labor statistics. ADP is another. Challenger Gray and Christmas is another. Indeed has been putting out labor market data, and I think the market, investors generally have been kind of struggling to make sense of all these new alternative sources of information. So, there's composite indices, there's labor economists trying to weigh in, saying, look at this, don't look at that. But it has been confusing. We are relying more on information that is new and it's useful, but I think market participants are struggling a little bit to find out what is credible and what should they use as a not just as a marker of economic health, but also what are monetary policies using? What's predictive of policy?
It's hard to sort of predict anything at this moment, especially with the uncertainty in the Middle East. How does what's happening over there right now, maybe in terms of oil prices, the possibility, I guess there's always the possibility of tariffs and inflation, but how in particular does what you're seeing and what everyone is seeing unfold in Iran and in the Middle East, how does that translate, do you think, or are you projecting to the labor market as a whole? Do you think those two things are going to correlate at all?
So in terms of like how it's going to play out, I think it's anybody's guess. But what is becoming clear is that this is a bigger action than the market was ready for. So when there were strikes on Iran a few months ago, the market didn't really react that much. And there's kind of rockets flying from Iran to Israel, from America to Iran. There's kind of little fights happening all the time, and that's not new. But now to take out the head of state in a massive country like Iran is such a big, like there's no going back from that. We can't chalk this up to a minor skirmish. So that is throwing more uncertainty into an already uncertain economy. There's so much uncertainty in the economy around tariffs and around AI.
Hmm.
Companies do not know how AI is going to manifest for their own company, let alone the competitive landscape. And now we're seeing, more upheaval in global politics. And it seems like, Iran will be trying to, create more damages on just like shipping pathways and allies of the U.S. just to create enough pain for the U.S. to kind of leave this situation. And we don't know how successful they're going to be.
Yeah.
So I would say uncertainty added to more uncertainty, and we are in a already risk-off environment, which is which is more trouble.
It's very complicated. We're speaking with Ben Zweig, labor economist and CEO of Revelio Labs. Just a couple other things I wanted to get to here. Two things I thought were important. One is this sort of concept of low hire, low fire, which, if you're out there and you're trying to find a job, you sort of are seeing this already. That it sort of is what it means. And what does this jobs report tell you about that concept for what employers are dealing with right now, the low hire, low fire situation?
It, yeah. So this is a very real phenomenon that hiring rates are as low as they've ever been, and attrition rates, separation rates are as low as they've ever been in recent memory. I mean, and this is coming off of the Great Resignation of
Right,
2022 when they were
right.
sky high. So we have a very immobile labor market right now, and that is continuing at similar rates. Attrition rates, separation rates are persistently low, but seem to be flatlining. But what we're seeing in this reduction is not an increase in separations. It's actually just a decrease in hiring. So I think that should make us concerned that the unemployment numbers are a little bit artificially low, because if we are seeing
Hmm.
a lower rate of inflows into the economy, that might mean a just increase in labor force participation, kind of disguising, what is really more like unemployment.
And last question for you, Ben. I mean, obviously, for a lot of homeowners or investors or people looking to buy a house, it's a challenging time. I know the Fed does have a meeting coming up. You know, the other ongoing debate is whether or not there's going to be a rate cut, and obviously that's led to some of the issues between President Trump and the Fed chair. But what do you think that this jobs report could have with this meeting coming up?
It's certainly going to put more pressure on the Federal Reserve to cut rates. I don't know if they will, because there is a good deal of inflationary pressure. But this jobs report is certainly going to push things in that direction toward more accommodative policy.
All right, Ben Zweig, labor economist, CEO of Revelio Labs. Where can we find you if we wanted to get some more information, Ben?
LinkedIn. I post a lot on the state of the labor market, put out weekly labor market insights, and monthly put out the employment situation report, which we call Revelio Public Labor Statistics. So Yeah, there you go.
Track you on LinkedIn. All right, Ben, thank you very much. We appreciate the insight, such good information. I know we called you last minute, but he was right there. Ben, thank you very much. All right,
Thanks
we're
so
going to
much.
take